Welcome to EC201, Principles of Macroeconomics. Now in this PowerPoint, we are going to focusing on the circular flow model. So let's get started. Once you finish this PowerPoint, I would hope that you can understand the following. What is a circular flow model, right? And also, what are the differences between real variables and nominal variables? And finally, understanding why income equal to expenditure. Now remember, one of our objectives in this PowerPoint is to show income equal to expenditure. Now sure, personal income usually does not equal to personal expenditure, but remember when you study macroeconomics, we are studying the economy as a whole. So it is true that if you, for the economy as a whole, income do equal to expenditure. Why? Because for every transaction, you're gonna have a buyer and the sellers, right? The expenditure of the buyers will definitely equal to the income of the sellers. So in the next slide, let's look at some example to show why this is the case, why income equal to expenditure. Now let's look at an example to show why income equal to expenditure. Well, let's say you have this transaction. Here, Mary pays James $50 to mow her lawn. Okay. Now, what happened with the total expenditure and what happened with total income? Well, in this case, obviously, James is a seller, right? He provides a service to Mary. So in this case, Mary is a buyer, right? Because he's hired James to mow her lawn. Well, James gonna earn $50, and Mary gonna spend $50, right? You can see that once again, right? As I said in the last slide, the income of the sellers is the expenditure of the buyers. So what happened with total expenditure? Well, obviously the total expenditure rises by $50, right? Because that's the amount of money that Mary spent. And at the same time, total income will raise by $50 because James just earned $50 by mowing Mary's lawn. So this is an example to illustrate why income has to equal to expenditure. Because you can see that both expenditure and income increased by the same amount, $50. Now, remember one of our objectives is to understand the circular flow model. So let's do that. Well, the circular flow model basically presents a simple pictures of macroeconomics, how each sectors interact with each other. Furthermore, in this circular flow diagram, I want to illustrate that you can actually measure GDP either through spending or through revenue from the firm, factor payments, and income. Now notice that here, spending and revenue are the same thing, right? Spending is from the household, which is equivalent to the revenue that the firm collect, right, through the sales. Similarly, when we talk about factors of payment, for example, wages certainly is the cost or is the expenditure of the firm, whereas income obviously is income, right? Income of the household. Well, before we actually go through the circular flow model, I just want to make sure that you do remember your principle of microeconomics. So here, when we talk about the factor of production, we are talking about input like labor, land, capital, and natural resources. And when we talk about the factor of payments, it's the payments to the factor of production. For example, if you provide labor, in return, you receive wages. If you provide land or capital, in return, you're going to receive rents. Now, in this simple circular flow model, we assume there are two economic players. The first one is a household, right? Household own the factors of production, and then they sell or rent them to firms for income. For example, you if you work at RIT, you're basically providing a labor service to RIT, and in return, RIT has to pay you wages. And then you're going to use this income to purchase goods and services. Another economic players in this simple circular flow model is the firm. Firm will hire workers, or firm will rent a land, and then they will turn their labor and workers into goods and services so that they can sell these goods and services to their consumer, and in return, earn revenue. Now let's draw a circular flow diagram. And we have firms and household in this simplified version of the economy. Household is going to provide labor, land, capital to firms through the market for factors of production. In return, firms have to pay wages, rent, and profit to the household when they hire workers. Well, households are going to use this income to purchase goods and services, and the spending from the household will become the revenue for the firm. So this is a circular flow model that we use to somehow give you a picture as of how each sectors interact with each other. Now, one thing you notice is that in the previous graph, you have red arrow and you have green arrow. Why? Why am I doing this? Well, it actually comes with the idea of nominal variables and mu variables. So here, let's go over the nominal variables. Nominal variables measure in monetary units. For example, wages, price, rent, right? Wages, we're talking about $6 per hour. Price maybe $10 per bottle of water, right? Or rent $200 per month. All of them are measured in monetary units. And you can see that in the previous graph, wages, price, rent are represented using a green arrow. Okay. Now let's turn to the real variables. Real variable measure in non-monetary units. So for example, working hours, right? 1 hour, 60 minutes, machines, right? If you buy 2 cars, 3 cars, or goods and services, right? They are not measured in terms of the money, right? You don't measure 1 hour as like $6. 1 hour is 1 hour, no matter what, right? And they are being represented in the inner circle in the previous graph, which is the red arrow. Now, you need to understand the differences between nominal variables and real variables, especially towards the end of this semester when we start talking about monetary policy, fiscal policy. It will become important as you analyze those supply and demand models. So make sure you understand that. Now, obviously, economy is more than just firms and households. For example, government also play a role in the economy. They collect taxes, buy goods and services. Furthermore, in the previous circular flow model, we assume that the household is going to spend all their incomes to purchase goods and services. That's definitely not true, right? Households tend to save part of their income too. Where do they save their income? Well, they put it in the bank. So in this case, the financial system. Okay, the purpose of the financial system is to match savers' supply of funds with borrowers' demand of loans. But that's something that we're probably not going to talk a lot in this class. We reserve this to the monetary policy and analysis in the higher level econ classes. And finally, there's a foreign sectors, right? Country do trade. Okay. So that's something that we'll discuss in the next PowerPoint chapters. So what have we learned? Well, we learned that if I want to measure GDP, I can either measure through the total purchases of household or total income paid by firms. And finally, income equal to expenditure. So in the next PowerPoint, we will start discussing what is GDP. See you then.